Hey friends, it's Simon with ToughTrader.com and Trade and Perform Coaching, and wanted to go over something that was it's pretty important to me as a trader because of the amount of pain that it causes clients that I coach one-on-one, and that is how to identify when a gap up fails. And it's important because the gap up offers so much hope of huge, tremendous profits. Really, what people want to see from a gap up is something like this, where it gaps and just rips. Unfortunately, that didn't come all the way to the end of the day. So I thought I would take a minute and just go over what the factors are in a gap up that fails so you can identify them relatively quickly, take notes, and hopefully you don't get crunched when the failures come. So let's kind of jump into it. Before I get started here, just a quick reminder, past performance is not indicative of future results, right? This is for educational purposes only. You can lose a lot of money trading futures. You have to know what you're doing, right? Have a loss management plan. Stop trading if you're losing money consistently, right? And wait till you have a method and an edge that provides consistent profits, either with a great risk reward or a high win rate, or if you can, both. Anyway, that's my 2 cents about the legal notice, right? Let's jump into it. I'm basically sharing my trade plan with you in hopes that it'll make you a better trader. So if we look at this morning, this is my chart from today, and the gap up looked pretty hopeful. I want to show you this here. This is what we look like on NQ. And so did it meet my first requirements for a potential trend day up? Well, it did. We were trading above Wednesday's high in both markets. And in NQ's case, it was actually a pretty healthy gap. As you can see, we closed out down here near 69.50, and we're gapping all the way up towards 76. It was actually a pretty healthy gap. And they both had the first requirement that I have, which was the first 5-minute bar is green. Now, you can find examples of trend day up where the first bar is not green, but what I generally want is I'd like 3 green bars in a row out of the gate. That shows strength, something that maybe if you want a visual would look kind of something like this, or really an exact picture is if you took this and said this is the beginning of the day right here, 1, 2, 3, 4. I just want strong buying out of the gate. So we started off okay. The tick was good as well. We were up over 800 on the tick. I would expect, so the first thing that in my head that I would expect is when we get to 0 tick, and you know what, I need to get a drawing tool out here, so let me do that really quick so I can color this up. Let's see, where are we? Here we go. This will be up in just a second. And I'll still go to meetings drawing tool. There we go. And let's make this pink. Okay. Drawing tool. So what I would expect, I'm going to draw right here, is we have the prior day's close. It's like this down here. The market gaps to this point. I want 3 consecutive green bars. And then what I'm referring to over here on this drawing here, I'm just going to move this whole chart to a blacked out space so we can see this clearly. There we go. So we close here, we gap up, we drive higher, and there's a couple things that I'm looking for. First of all, on the first 5-minute bar, I really don't even want to trade below the first 5-minute bar, and I certainly don't want to close below the first 5-minute bar. That's my first sign that, hey, there's a problem right now. It does not eliminate the possibility of having trend day up. It just greatly reduces the odds. Warning sign number 1, right? Warning sign number 2, this is the tick. This is the NYSE tick. It opened up over plus 800. That's a great start, okay? When it gets here to the 0 line right here, what I wanted to see in that process is as if this is tick, as tick is coming down, I wanted to see price either do this or come up and do, let's say you had 1, 2, 3, maybe even 4 bars were just traded sideways, so that when tick gets to 0, okay, we're above the first 5-minute low, right? We've consolidated sideways, because what does this tell me? This tells me that the broader market experienced selling pressure. And then as that selling pressure increased in the broader market, within the index itself, so I'm measuring the S&P 500 against the entire broader NYSE index, right? That pressure did not extend into the S&P 500. So when the broader market gets bought with responsive buying back up, and the tick advances back towards that 600 range, which it's apt to do, right? what should happen here is that we should take off on ES and NQ and push to the upside. Okay, so now we have our first clue in the first 5 minutes. So number one, while we did not trade below the first 5 minute low, we also had the inability to close above the first 5 minute high. Problem number one. Secondly, the blue dotted line here is Globex high. We couldn't get above Globex high, and we couldn't get above Globex high, right? The pre-market was strong. We couldn't get above Globex high in either ES or an NQ. And normally what you want to see, and again, it's not a 100% of the time, but this is what generally a healthy gap and go market looks like, is both NQ and ES are taking off. Now, sometimes you'll see one take off and the other stay in place, or you'll see the vice versa. NASDAQ will take off and ES will kind of hang out back, or ES will take off and the NAS 100 will hang back. But when they're both doing the exact same thing, so the ideal thought would be that they're both taking off together. But when they're both have an inability to get above the first 5 minute high, warning signs should be flashing big time. If you're sitting on a big position, right? Think about it. You're not the only one that's figured out in the world that the gap up often leads to trend day. So a lot of people have bought that open. And now what's going to happen to these people as we sit here is that your buyers and your gap and go is going to turn around and turn into, your buyers are going to turn into sellers, right? The next clue that we had that we weren't going to open drive higher in here, I'm going to focus in on ES, but it's the same thing on NQ, was when we get to the zero tick right here. I'm going to expand this so everyone can see it clearly. When we get to the zero tick, which occurs on this bar right here, right? What would I expect in a trend day up? Well, I would expect that the zero tick hits and that both the market and the tick lift. So if you'll look at what the market actually did, we actually did lift right here. We came to zero tick, right? We did not trade below the first 5 minute low, and you can see buyers stepped in because we got a positive bar, and we drove all the way up to the top of the range. Now this bar, what I remember, there's a very famous saying in almost all trading books: when you don't get what you expect the opposite, right? So when we get up here and buyers have an inability again to close above the first 5 minute high, and you know that one of your characteristics is in a trend day up is you get above that first 5 minute high. You can't have a trend if you can't get above the first 5 minute high, right? Now you know that traders are potentially stuck. Next, tick goes negative, and I'm going to go back and find a proper trend day up for y'all here in just a second so you can see the comparison. Tick goes negative, warning sign number 3. And then the big killer here, at least to me, was after that zero tick and after the data at 9 a.m., we get a bar, and while that bar trades below the first 5 minute low and closes all the way at the low, and it's the lowest close of a 5 minute bar to start with. And then the last piece in here, right? So you're looking for a trend day up, and that means on a trend day up, when the market starts, if you close, you gap, right? And then it retraces. What you are looking for in that retrace, right, is you don't want to see it pull back beyond the 50-60. You're looking for it to come into that 50-60. Remember, everyone's thinking trend day up, right? There's lots of buyers just dying to get in. So as soon as it gets to that 50-60, you should see those guys, if it can even get there, run. And in most cases, early in the day, you get nowhere close to that 50-60. As a matter of fact, I would even venture to say that if you get back to the 50 retrace, there's probably a problem to begin with, right? That's one of your early warning signs in this process, right? So if we take these pieces and we put them all together so that it comes through in a set of rules that you can put it together. So rule number 1, we should not trade below, or it's a sign of weakness if we trade below the first 5 minute low. Secondly, we shouldn't get past the 50-60. Third, when we get to the zero tick, we should see a buy response, and that buy response should take us to a new high, right? That buy response off the zero tick should take us to a new high. And the fourth, I would say, is that either NQ or ES should be above Globex high, right? It should be getting above and holding. In other words, they should just be so busting to buy this trade, to buy this market, that the Globex high was just a faint memory, right? Really, the shorts were just hoping you could get back below Globex high so they could have some pull in. Would be the hope on a trend day up, right? And then while we're talking about it, so the next thing I want to do here really quick, hold on one sec. Let me do this really fast because I can show you what it looks like when it's picture perfect. Copy window, paste window, because I don't want to get quite rid of my zones just yet. Let's erase this. Okay. And let's compact this up really fast. Trend day up. Where's the last gapping go that we had? Not here. Not here. It looks like. We've been gapping down a lot and going. Let's see where I can find one where we gap up and go. Hold on one second. It's worth noting from a gap up, almost all of these have been gap downs. This was trend day up right here. So let's go look at the characteristics. Okay. That wasn't, there we go. Okay, here we go. So let's start this over and pretend like this was today. So now we can see what it looks like when it actually works. Okay, we're going to mark off where our 0 tick is on the NYSE tick, right? So number 1, do we have a gap? Check. Another checkoff point that you'll want to use is, are we above prior day's high? So here's prior day's high right there. And yes, we are gapping above prior day's, oh, take it back. Just sneaked out on us. So we have not gapped up above prior day's high yet. So let's go through the process. So bar number 1, reason for caution, because the first bar is red, not green. Again, what do I want in a perfect scenario? This, but a great example of how not fitting the perfect scenario can still be a drive up. So case number 2, we fail to trade below 5-minute low. We hold the gap right here. There's really no punch into the gap at all, right? Number 2, we have a strong tick out of the gate, and as tick approaches 0, right? So let's mark off where it hits 0. So we can see what it actually looks like. And by the way, this is January 26th that we're looking at. And this is, I'm going to go with that bar as the first bar that hits 0. So we open up, in 15 minutes we hit 0. Notice, instead of the market coming in, right, I failed to trade below the first 5-minute low. The tick is coming in, meaning I'm getting broader market on selling on the broader market. And as I'm getting selling in the broader market, the index itself can't push below the low. I get to 0 tick. Now notice, I don't get the response, but notice something interesting happens here. Tick now pushes negative, which would actually be a warning sign for me. But look, as tick actually gets more negative in here, and we actually dip below 0, see how price is starting to push up? It's the opposite of what you'd expect to think. You think, oh, we've opened up, tick was strong, and as tick is coming in, I would normally expect the market to push down with it, right? So what that says is, even though they were selling the broader market, money's still pumping in to the index. Number 2, I'm able to close above my first 5-minute high right here, right? I then consolidate sideways, but notice I don't break my swing low, which is now my 5-minute low, even as tick gets more negative. Normally, what I would have wanted, of course, the market's never going to present it to you perfectly, is that we just came into 0 tick and ricocheted right off, never provided it for you. But you can see on each bout of weakness on this trend day up, the market, even though tick is getting pretty negative here, can't break its prior swing low, okay? So if you look at January 26th, it's a great contrast to what we had today, right? So we'll go back and look again at today really quick so you can see the front and the back side of that failed range extension, or failed gap, excuse me. So same situation, same gap up, inability to close above the first 5-minute high. As tick comes in, we're actually getting, notice that the bodies of the bar are actually closing lower as it comes in. We make attempts to close above. We can't do it. And then finally the killer here, new low close on a 5-minute bar. And once this occurs, notice the whole change of the day comes off, and now we're working towards gap fill, which was what we eventually got. And there was just no interest this morning is what that shows. And normally you'd say, well, that's not a big deal. unless you took the long. So a lot of people in this market with the volatility have gotten used to going, well, I'll use either a larger stop or I'm willing to re-enter the trade over and over again to try to make it work. And from my experience as a coach, where I see people losing money, is they go, oh, it's going to drive higher. Oh, I took the loss. Oh, it's going to drive higher. And instead of being strategic where they're entering the market and going, okay, well, what levels are here that make sense? Or let me get above my last best seller. Let me have some strategy for finding support, which we use in the room on a daily basis, right? What they're doing is they see the market starting to jump, and they keep jumping in at key levels. Now, that may not be you, and that's good news if it's not. But what you can see that the market has consistently done here is every time it looks like it's about to break, there's a reason why we're having these swings like this and sucking back down. Is what they're doing is they're sucking in buyers. Buyers are getting eager. Notice that instead of pushing to new highs at 600 ticks here, what we're doing is we're sucking in traders and they're shaking them down. We get to a 600 tick and they shake them down, right? And what this turned out to be was a balance day, which I tweeted earlier in the day. And on balanced days, right, because we didn't fail, this really wasn't exactly a failure. We still were positive on the day relative to the close. What this was if you focused on the negative tick here, each time the tick got negative and you look for location down here, that was key, and a key setup, you were actually able to get pretty nice rotations back to the upside. And it's so obvious when you're looking at this when the market's closed, but when the market's open, if you don't quickly identify, hey, there's a problem up here, this isn't obvious until we get all the way over here and you go, oh, look, every time we hit a 600 tick, we're rolling back down, right? So again, the thing that I used that made me cautious early in the day was this bar and this bar kind of sealed the deal, and the lack of response from the zero tick kind of sealed the deal for me that we were going to probably roll to the downside, plus the inability to get above Globex high kind of told me that we were probably going to push back into the inside. So those are your checklists. That gives you an example of what a trend day up looks like when we get sell pressure and it doesn't buckle versus what it looks like when we get sell pressure and it does buckle underneath the pressure. And if you can learn to identify that quickly, right? And the easiest way to do that, by the way, guys, is so remember in this market, meaning the past 6 months to a year, the gap and goes have been very, very common. It's been very rewarding. But remember, markets work in cycles. And if you go back and look at, a good example would be the summer of 2011, August 2008, 2009. There's a lot of examples of where we would gap up and then drive straight lower, right? And if you were a gap buyer, you got crushed repeatedly. So markets change, right? And cycles change. And if you can identify the failure of this, you can protect your capital pretty easily, and then you can start getting to work. And we were actually in the room short out of this area after we identified this morning, so which is good. So anyways, that's it. If you have any questions, hold on a second. I actually ended up with a question. They're not, Clint. If you're on the line, they're not important. He was asking me about the red zones. They're not that important. They show mostly where open gaps are. At any rate, that's my 2 cents. If you'd like to come visit us in the room and see how we trade, how a professional trader with over 20 years of experience trades real time, and get the setups, please send me an email to tradertough, TRADERTOUGH @gmail.com, and I will be happy to extend you a 5-day pass. Please make sure, well, actually, if you hit the information site off the website, toughtrader.com, please make sure you include your response email. And if you just straight email me, obviously I'll have that. So anyways, hope everyone had a great night. Protect your capital. If you liked the video, please, please, please hit the like button. It really helps me out. And remember, the whole objective of this is not to trade a lot. It's to stack chips. Find your key entries, find your best setups, wash, rinse, repeat over and over. It shouldn't be exciting. It should be just repetition and process over and over again. So anyways, have a great night, guys. I'll see everyone in the morning. Talk to y'all soon.